If you're getting a mortgage, would it help if we broke down the exact things that banks are looking for when approving for a mortgage? In this video, Sung Lee, co-founder and managing partner of Swivel Mortgages, does exactly that. So I was recently in Toronto and Sung and I were invited to speak to the staff of a company about real estate investing. Sung broke down the 5 C's of getting mortgage financing, plus he gave a bonus tip. Now this video is for anyone who's looking to get their first mortgage or their 5th mortgage. These are all great reminders because this will set yourself up in a position to maximize your chances of getting approved. And who wouldn't want that? Now, if you have any questions that may have come up during Sung's presentation, leave it in the comments below and we'll be able to answer your questions.
How many of us in here have a LinkedIn profile? Pretty much almost everyone in the room here. Meet Joe. So Joe got his driver's license today. Awesome, right? So Joe also has LinkedIn, and so he's so happy about this that he wants to share this news with all of his connections. So he writes, "I'm honored and thrilled to announce that I have been selected amongst the top 5 applicants who participate in the professional and most respected exam, which evaluates the skill and ability to operate fuel-based vehicles. I cannot wait to see what the next chapter holds, and I must express my appreciation to the Ministry of Transportation, Google, NASA, all my neighbors who supported me along this challenging journey." While it might be a little bit exaggerated, I think what he's done is he's actually cracked that cheat code for LinkedIn on how to present the best version of himself for something like getting a driver's license. So today, we're gonna spend a few minutes just talking about the mortgage cheat code and what it is that lenders are looking for and how you can present the best version of yourself to set yourself up for mortgage approval success. A little bit about myself. I'm co-founder, managing partner at Swivel Mortgage Group. I've been in the financial services industry for about 18 years. I am a licensed mortgage broker and self-proclaimed industry expert. I want to give you guys a sneak peek or a look under the hood into exactly what lenders are looking at when they're trying to determine, should I give this guy an approval? Should I decline this person? Should I offer them the best rates? Okay, so how many of you have heard the 5 C's of credit? So essentially, this is that cheat sheet that lenders are looking at to determine, how qualified is this person. Oh, and then I consider something a bonus 6 C, which we'll talk about towards the end of the presentation. Number 1 is credit. So we know, whenever it comes to credit products, how important it is to have a strong credit score. Number 1, making your payments on time. A lot of people will, make sure that they pay off the entire balance, but sometimes you don't have enough funds to pay off the entire balance. In those situations where you can't, you want to make sure that you're making at least a minimum payment. There's been so many times where I've had clients say, well, you know what, I wait 3-4 months and I make one bulk payment and my credit is amazing, right? But every time you're missing your payment, even by a day, that's impacting your credit score. Another thing is something called credit utilization. So you want to make sure that the total balance relative to your total limit is staying below 50% as often as you can. So if you have a $1,000 credit card, if you're constantly carrying a balance of 900 or 1,000, that's gonna decrease your score. So you wanna keep that as low as possible. Mix of credit product. Let's assume I'm up here juggling a single ball, up and down. I'm not very impressed, right? Now imagine I light that ball on fire and I get a sword and a kitten, right? And I'm juggling all these things at once. Pretty impressed? Yeah, especially if I'm not lighting the kitten on fire and I can manage this. For sure. So same thing with your credit. If you have an 800 credit score, but you have a Best Buy credit card, and that's it, versus someone who has a 700 credit score with a car loan, line of credit, credit card, you can manage all of those. That's much more meaningful in the eyes of a lender than having just one credit product. So a couple of quick don'ts. Avoid applying for credit products all at once. So you want to spread out applications whenever possible so it doesn't seem like you're a credit seeker. And if you are ever thinking about canceling that Best Buy card or the Home Depot card, don't cancel it, cut it up, throw it away, keep it open, okay? Because that will impact your credit utilization. This is a quick snapshot of what comprises of your credit score. Capacity, so what is your total income relative to the expenses? So General rule of thumb, when it comes to housing, so your mortgage payment, your interest, so principal interest, your property taxes, and your heat, you want that to be below 39% of your total gross income. So your pre-tax. When you add all of your additional expenses, so things like your loan payments, your credit card payments, that should be below 44%. Okay. This doesn't include regular budgeting like going out, utilities, and that sort of thing outside of your heat payment. A couple of don'ts. Don't change jobs too often, so stay committed, don't go anywhere else, okay?
There we go.
And don't take any new debt on prior to an application. So if you're looking to, get that new car, wait until the mortgage is closed before you go and get that new loan. Collateral. So, this has to do with actual real estate itself. So making sure you work with a great realtor like my buddy Felix over here, and choosing a property wisely, because the asset is what the security is. So if a lender, let's say you borrow money from me and you stop making your payments, my recourse is that I need to sell this real estate. So you want to make sure that it's something that's going to keep its value, that's marketable, that I can resell without taking a huge loss, and I can flip over relatively quickly. So that's what lenders are looking for. They want good, solid real estate. Conduct a property inspection, know its value, so you want to avoid overpaying for real estate. And then a couple of don'ts: avoid high-risk properties, so that could include student housing, Airbnbs, grow-ops, because that's going to limit the number of lenders that will approve you. And avoid overvalue or overstating your property on the mortgage application. Capital. So capital is essentially your down payment and your savings. So when it comes to an investment property or rental property, you need to have at least 20% down. And what this shows to lenders is that you have some skin in the game, right? They're giving you money, what are you putting up front towards this investment? For closing costs and extras, so when you are closing on a new purchase, you also want to save anywhere from 1.5% to 3% of the purchase price to account for things such as legal costs, appraisals, home inspections, moving expenses, furnishing the property. Okay? And you want to document any large deposits. If, let's say, you got married this weekend and you have a lot of generous friends who gave you cash gifts, right? You want to make sure you have that marriage certificate handy so you can document exactly where these large deposits came from. And a couple of don'ts. So avoid sudden large withdrawals. It could be a red flag, prior to closing the mortgage, and avoid risky investments. So if you are using crypto or stocks or anything like that as part of your down payment, you want to make sure you're de-risking it in advance so that it doesn't cause any issues when you're trying to put that towards the actual down payment later on.
Can I interrupt you, Sung? Mm-hmm. So since we have a few crypto people here, is crypto considered an asset to the lenders? Can you use that as part of your asset on the application for mortgage?
I would say in most cases, no. So you may find some common sense lenders or someone that works for a lender that might say, I kind of get it, but it's so volatile, right? So what they would most likely ask is, well, you know what, why don't you cash it out and convert it into cash? And then we'll see how much it's actually worth. Okay, and then number 5 is character. So if I'm lending money out to someone myself, I want to make sure that this is a good person, I can trust them, they're stable, they're reliable. That's exactly what lenders are looking for, right? So you want to demonstrate stability. You want to make sure that your overall credit portfolio, your financial situation matches the life stage that you should be in based on your age for the most part. If that's very different from what the norm is, then they're going to be asking a lot of questions. Be honest, right? So I know some people try to lie about certain things and make themselves appear better. You're only going to hurt yourself in the end, right? Because you might get by one door, but there's all these other checks that happen. And so you want to avoid that. Quick thing, don't change addresses frequently, right? So I know there are like a lot of international students that will come and they'll live at like 6 different addresses in the span of like 3 months. That actually impacts your credit quite a bit, right? Because then it seems like someone who's unstable, unreliable, and you don't want to misrepresent any detail. Lastly, so there's always a bonus 6C, which is just plain common sense. So you want to work with someone who takes a common sense approach to every single mortgage application, and more importantly, someone who has access to lenders that also take a common sense approach. Quick recap on the 5 C's again with that extra 6. So credit, your credit history, your financial report card, maintain a healthy debt to income ratio, choose the right property wisely, building savings is key. You want to show your commitment. Your financial reputation really matters. And then again, having that common sense and working with a partner that has that common sense. Oh, so here's Joe again. So, obviously we like Joe, he's a good guy, right? But, we'd much rather deal with a guy like Joseph, right? Who knows how to put his best foot forward and to always appear in the best light. Okay, so thank you very much. I put up a couple of QR codes here as well. So if you do have any questions afterwards, we're gonna be answering them. But if you have anything about your own personal situation, you wanna reach out, these are my details here. If you'd like to be added onto our VIP list for rate updates, newsletters, and just industry knowledge, feel free to subscribe to our VIP list as well. Thanks, guys.
Cool. Thank you very much. So hopefully this presentation has given you some more clarity on exactly what banks are looking for when approving for a mortgage. Now, I'm gonna leave Sung's contact information and as well as Swivel Mortgages down in the description below. So if you're ready to start the mortgage financing process, reach out to him directly and let him know that you saw this YouTube video. If you have any questions, let us know in the comments below. And if this has helped you, we would love your support if you took 2 seconds to like the video. And if you like this kind of content, feel free to subscribe. We'll see you in the next video.